Want to turn $100 into $1,000 or $1,000 into $10,000? In today's video, we're talking about 3 option trades in 3 stocks that are getting ready to explode. This isn't just your average or typical buy and hope stock strategy. In this video, I'm going to show you exactly how we're going to buy a LEAPS option in SOFI, as well as why, and a poor man's covered call in HIMS, and sell a put credit spread in Robinhood. And we're going to do this all on the option trading platform and make some quick money. So if you're ready to stop guessing and start winning, whether you're a beginning option trader or an experienced trader, we've got something for you in this video. Make sure and hit the like and subscribe buttons down below. Download the free options workshop as well. It talks about the main benefits of trading options over buying stocks. And disclaimer, I'm not a financial planner. I'm not recommending trades. Do your own research, and you're the one taking the risk, so you've got to do the ultimate risk. All right, guys, we're going to kick this off with a LEAPS option trade in SOFI. And what sets SOFI apart from other banks and fintechs? Well, SOFI stands out as a compelling long-term growth stock due to several key differentiators. A comprehensive digital platform is the first one. Unlike most digital banks that offer limited services, SOFI provides a full suite of financial products, including loans, banking, investing, and estate planning through a seamless digital experience. It's a one-stop shop, and it enables customers to manage all aspects of their finances. They are also targeting underserved demographics. They focus on young, high-income individuals who are often overlooked by traditional banks. This is a tech-savvy group that values convenience, making them more likely to adopt and stick with SOFI's digital platform. They have strong revenue and user growth. SOFI has demonstrated robust financial performance with adjusted net revenue growing 24% year over year and adjusted EBITDA up 54% in 2024. Member growth reached over 10.1 million by the end of 2024, which was a 34% annual increase. Their profitability and operational efficiency is exceptional. The company achieved consecutive quarters of profitability, a significant milestone for fintech firms. Okay, guys, if we look on Yahoo Finance right now and punch in SOFI, we can look at the 5-year chart. We can look at a little longer time frame, and you can see it was way up at the 22 range back a couple of years ago, but just recently in January of this year, it was up at 17. And again, this is a super strong stock financially. The 1-year target, Yahoo's got it very low at 13. I think we're easily going to get back up to that 20 range here soon. If we go to the analysis tab, and we can take a look and see what it's done as far as earnings. The last 3 quarters, it has beat earnings. And for some reason, there we go. We switched. Okay. You've got 3 beats and they're profitable. The analyst, there's a lot of holds, but quite a few buys and strong buys as well. So switching to the platform, this is the Tastytrade option trading platform, one that I use. It's great, very intuitive. There's a link down below. If you use the link, there's some benefits. What we're going to do is we're on the chart right now, and you can see I've got the 50-day moving average and the 200-day, and the 50 is right at the 200-day. So I'm looking for a bounce. Now that these tariffs, I think some deals are going to start to get negotiated, and interest rates should be lowered over the next few months, which will definitely help SOFI and their business as well. We've got the RSI down at the lower end, meaning that SOFI is oversold. So let's go ahead and switch to the trade page. And with a LEAPS option, what we're doing is we're going out close to a year. So I'm going to go out to the 332 day to expiration option chain, which is March 2026, and click to open that up. Calls are on the left, puts are on the right. Now, the stock is trading for $11.18. I'm going to go deep in the money and the 8 call, and we're going to look to buy it. Ask is buy. It's right here. And And we can buy that for $4.60. So that's $460 to control 100 shares of stock a year out. Versus if we were to buy 100 shares, it would cost 18 times 100 is $1,118. So less than half the cost. Now, if we go to the curve mode, and you can see the chart, as we go up, we increase in price. And if we get up to that 20 range, we make $745. So almost double our money if we get up to that 20 range, which I expect us to do this year. Let me know your thoughts down below. We hit review and send and place the trade. Hims and Hers sets itself apart from other healthcare stocks with its disruptive model and explosive growth. Hims has delivered remarkable subscriber revenue and growth with 2.2 million subscribers by early 2025 and revenue soaring 1.48 million, a 59% increase from the previous year. They are a subscription-based recurring revenue model company, and they have over 80% of their customers that have remained subscribed beyond 3 months, fueling high retention and predictable revenue streams. They're very personalized with an AI-driven healthcare model. They leverage advanced AI to deliver customized treatment plans and optimize health outcomes, enhance patient satisfaction, and they retain customers. Their market leadership in telehealth is by far the best right now. By offering a comprehensive digital platform for consultations, prescriptions, and ongoing care, Hims has disrupted traditional healthcare delivery, making access to medical services much more convenient, affordable, and private. They have strong brand and cost-effective growth. They began addressing stigmatized men's health issues and since have expanded into women's health, mental health, dermatology, and weight management, building a trusted consumer-first brand. They have a very positive outlook and expansion plans. They project revenue of $2.3 to $2.4 billion in 2025 with continued investment in technology, automation, and expanded provider support to handle growing demands. The poor man's covered call is the perfect strategy for Hims right now. We can capitalize on the uptrend in the price and collect monthly income by selling a short-term call against our deep in the money leaps option. Okay, guys, ticker symbol Hims, HIMS. We're on Yahoo Finance, and we can see the 1 year chart here, and we can see it was up recently at 72. It's at 26 right now. Huge buy, in my opinion. 1 year estimated target that Yahoo has is 44. If we look at the analysts' projections, there's quite a few strong buys and buys. They beat earnings the last 3 times as well. If we go to the Tasty Trade option trading platform, we can see that big up trend in the stock and then the drop back down with the tariffs coming. But we've still got the 50 above the 200-day, and I'm looking for it to shoot back up. The RSI is low, meaning that it's probably oversold right now. So we're going to go to the trade page. Actually, before we do that, let's look at the financials right here. You can see the revenue and income on the income statement, and huge annual revenue increasing year over year, and the balance sheet assets versus liabilities as well. So very strong stock financially. So we'll go to the trade page. Let's go to the table mode. We're going to buy that Leaps option out 1 year, just like we did on SOFI. And we're going to go to the 20 in the money call. We're at 26 right now. We can buy that for $12.05. Actually, the mid price is $11.45. So 1 times 100 shares, because one option contract controls 100 shares, it's $1,145 to control 100 shares for almost a year. And to buy the 100 shares outright would cost $2,609. So less than half the cost. Now, we're not only going to capitalize on the uptrend, just like we were in SOFI, but we're going to sell a monthly call against it. So we're going to go back to the table mode. We're going to close the option chain, and we're going to open up the May 16th regular option chain. That's 24 days to expiration. And we're going to sell the, actually, you know what? We can go from May, we can go to June, because we're already, that's only 60 days out. Now I'm gonna stick in May. We're gonna do it so that we can do it every month, and we're gonna sell. We can sell the 29 and collect $2.50. That is the 49 delta. I'm gonna go a little bit safer. I'm gonna collect a couple $100, $211. Actually, we can go to the 29, so we can get the uptick in the stock from 26 to 29. So we can make $3 on the leaps option, and then we're collecting basically $1.92 or $192 as soon as we sell this 29 call against the leaps option that we have. And this, you can see, reduces our cost by almost $200, $191. Our cost is $964. If we collect $200 every month, we're going to pay this off and control the 100 shares for free in 5 months. And if we get appreciated upside in the stock price, it'll be sooner than that. So we hit review and send and place the trade. Robinhood has several advantages over its competitors. They've got a massive user base and brand power. They've got over 25 million funded accounts and nearly $200 billion in assets. They've got rapid revenue and profit growth. In 2024, Robinhood delivered 58% year-over-year revenue growth. They've got recurring subscription revenue as well. They're shifting toward a subscription-powered model with its Robinhood Gold bundle offering high-yield cash accounts, IRA matches, exclusive credit cards, and premium research for a monthly fee. They've got diversification among their products. Beyond stock and crypto trading, Robinhood now offers managed portfolios, high-yield banking, estate planning, and soon advanced AI investing tools. They're a very high-margin business. Their mix is revenue increasing, driven by high-margin segments like options and crypto trading. They've got cutting-edge innovation, and they're pioneering new markets. They definitely appeal to younger demographics, with 70% of the users under age 40. And Wall Street is now endorsing Robinhood. They're viewed as a Wall Street darling with a consensus moderate buy rating and a positive long-term outlook. All right, guys, if we take a look at Robinhood, ticker symbol HOOD, on the Yahoo Finance, you can see they were just recently up at 64. The price is 42 right now, so it's on sale. They've got a one-year target of 59, and you can see with the last 3 earnings, they beat every time, and a significant beat with 52 cents last quarter. Strong buys and buys are the analyst ratings. So if we go to the option trading platform, we can see the chart, and you can see that big up move. Now the 50-day is approaching the 200-day. They're still above it, which is good. And RSI is fairly priced. So what I'm going to do is go to the trade page, and we're going to open up the May. We can either go May or June for the regular option chains. I'm going to look at the May, and we can go 42, 32. Let's 42, 37. We can go $5 wide and collect more than 1/3 the width of the strike, $194, while risking $306. So this is a great strategy. We could also go out further in expiration. We can hit this expiration button and go out to the June 20 is the next regular option chain, and collect 215. But because we're not collecting that much more, I'm going to stay in May. That will allow us to go ahead and collect this 195, and then if we get tested, we can roll to June and perhaps collect more premium as well. So you see we're at the 42.37, $5 wide. So max loss is the $5 width minus what we collect, the $1.93, so $307. Max profit is $193. And if we go to curve mode and analysis, you can see we're profitable down to that 42. We can even move down a little, down to 40. Basically, we're break even. So I like this trade. I think the stock's going to move up. We can do this and roll every month and collect a couple $100 every single month as long as it keeps moving up. So we hit review and send and place the trade. All right, guys, that's it for this video. Be sure and hit like and subscribe down below. Download the free options workshop. Leave a comment, ask a question. I answer every one. Let me know what you're trading and if you're placing these trades now or this week, and if you've traded them in the past and what your results were. Thanks for watching. I'll see you in the next video.